All right, welcome everybody to our weekly analysis. Today we're going to look at briefly British pound and USD, so GPU USD, and the week has been the week was filled with some sort of activity. We saw the pound moving up, and before later around Friday, late Friday, dropping some pips. So let's look at the expectations for this week. So as usual, we do top-down analysis where we start from the higher time frame, the monthly, and we move down to the lowest time frame, just to be able to give us an idea of what the market is doing. Because if you know what the market is doing, then you'll be able to react properly to the market. So let's just start. Now we realized that the highest point that GU came was somewhere November in 2007 when it was around 2.12, and the lowest that it came was somewhere in 2nd of March 2020. We could attribute this to the COVID issues. So you realize that COVID has really had an impact on the British currency, generally on most currencies, but the pound against the dollar is really going through its own challenges or stress. But as we see now, it's moving upwards and it's trying to take dominance. So let's look at with a trend line, we could give us a good picture of what has transpired in the period of from 2007 to date. The currency is actually on a downtrend, and this trend line has not been broken since 2007. So it has not been broken, meaning that the pound needs to regain some strength. When it dropped down to this level, the only time it came up was just up to this point, which was somewhere in 2014, and it's not been able to get to this level. All that is doing is dropping. When it hits the trend line, it drops. When it hits the trend line, it drops. So that's what's happening to the pound right now. So let's move to the next time frame. We are doing a top-down analysis. We're looking at the weekly timeline. Let's remove our drawings and reset so that we look at what is happening at the weekly level. So on the weekly level, we find that yes, there's been some impulsive movements to the top, and then we found some sort of activities going on here. But let's mark up before we'll be able to tell a good picture or a good story on what the market situation is for the pound against the dollar. So let's mark up and let's see how it goes for the pound. But remember that everything that is taking place takes place. The market gives you an indication of what it wants to do at any point in time. So you need to walk yourself through the time frames, all the time frames, to be able to understand what the market is doing. So seriously, that is why we do the markups. And from what we have here, we can see that it is in a channel, it's in a downward channel, and it came right here and it moved up to this place. It didn't break this trend line. And how many times has it touched here? Twice. This is the second time that it touched here. Let me do just a rough, yeah, somewhere 2014. That's when it came around this high. That's around 1.69 or 1.70, and it's never been able to get to this level again. It's never been able to. So it's just dropping and dropping and dropping, and it moves down. It breaks its own channel. It forms a channel in a channel, and then it drops again. And that's what the pound has been doing against the dollar. It's losing momentum, but at a certain point in time, you can see that it climbed up to this stage and it broke. But basically, all that is doing is moving up and down. It's moving up and down in this channel. And so, with that said, if you were to rule or to mark up here, you would have known that immediately it touched this end or this tippy top of the weekly trend line, and it couldn't break up. Our expectation is that definitely is going to drop down. But see what happened. It actually dropped down. It actually dropped down, and it has picked up steam again. It's going up again. So it's going to get exciting. Maybe when we drop down to the other lower timelines, we'll be able to understand why this has happened. It could be as a result of some fundamental analysis. It could be as a result of news or some releases that has come up. That is why this has happened. And so let's just try and look at what actually happened here. So let me reset. Yes, let me reset so that I can be able to mark up a little bit of it. So usually within the channel, you can have other channels forming in a channel. For instance, this within this channel, we got this uptrend here. We got this uptrend here. We got broken. We got this uptrend here. We got this uptrend here. Sure, we got this uptrend here. And just as I said, when you're able to mark up, you can figure out what the market is trying to do. So within this channel, you can see that it moved up, it didn't break this channel, and it came down. So it's been moving in this channel. It's been moving in this channel till it broke here. It broke at this point. So when it's breaking, it breaks, it will retest before it moves down. And as it broke the channel, what happened? It formed another pattern altogether. It formed another pattern altogether. Okay, so this is what it did, an expanding triangle. So it formed another pattern. And so if you're able to mark up, you can tell what it's trying to do. So that's all that it is. So if you cut up the pound from this level, let's see how much you would have been able to reap from this end. That's in March of 2020, 16th March 2020. You would have maybe just to the stop here, you would have made a whooping 1932 pips. That is a lot. And it would have taken you 168 days. So that's why for us who are swing traders, we look out for such market opportunities and then we jump into it. So we would have picked it up from here. So basically you would have been milking it. And then when it retraces or when there's a flag, as there was a flag here, you could also go into the market at that point in time again and then continue milking the market. Like as it's going up here, it retraced up to this level. You could go into the market also from this level and then milk it up. Now it has retraced and it's gone up again up to this level. Now it's at a critical point here at the weekly, because then we just have to be patient and check. Maybe on the lower time frames, it can tell us what it wants to do. If it breaks it out, if there's a breakout, take your time, wait for the correction. When it corrects, then you can go for a buy. Otherwise, if it's not breaking, just take it easy and then you can milk it right down. But usually you will not get it on a smooth path like this. You get something somewhere this way, and then it will correct itself to the top before it will break down, and then it will correct itself and then it will break down. If it were that smooth, then we would have had a smooth walk from that end to this end. But of course, it will release and then it will take some back and it will release, it will take some back, it will release, and then it can take it back to a certain level or reverse to a certain level, and then it will continue in the pattern. So if you did you did mark up, you'll be able to understand what the market wants to do exactly. Now let's move on to the daily. So usually the most important time frames are the monthly, weekly, and daily. It gives you a bigger picture of what the market wants to do. So let's check out on the daily what it's doing. So we can see clearly from here, if we mark up that the market was on an uptrend. Okay, the market was on an uptrend. The market was on an uptrend. The market has been on an uptrend. Yeah, the market has been on an uptrend, and as I always said, it will tell you what it wants to do. The market will always tell you what it wants to do. And because this trend line has not been broken for so long a time, it respected the trend line. But if you look at it further, it's as if it went there, but it didn't break. The breakout was not clear, so you cannot assume that this bearish candle here is a breaking candle. No, it must be clear. It must break it. It must retest, and then boom, goes up. And then even if it goes up, we are expecting that it will come up to this height here, because of market structure. It will respect the structure of the market before probably it will release down. So as it stands now, we will go to maybe the 4-hour timeline. Then it will tell us exactly what the picture it is trying to tell us. Okay, so you can see that there's always a channel, and a channel it plays in there. It broke, and then it's doing what it wants to do. So don't be hard, be very flexible on the market. Don't say that I'm buying, so the market should buy at all costs. No, the market will do what it wants to do. We are retail traders, and our capital is not enough. So it is the big players on the market that move the market. We are not able to move the market. All right, so basically on the 4-hour time frame, this is what we have. It came this high previously. It came this high previously. And so chances are that maybe with a horizontal ray, we could see exactly where our expectations will be. If it's going to really break, then it must break and it will maybe reverse around this point here. But if the break is very strong, then it means that it will go further up. However, from what we see here, we are seeing that the market is moving downwards, or it's selling. The pressure from the sellers are more than the buyers. Okay, so we expect that this will come down up to this level here before it will go back up again. So within this week, for my expectations are possibly the pound would drop down a bit to this level, but definitely it will not be a straight course. It will maybe drop a bit, and then it will move up a little more, and then before it will give a final drop. My expectation also is that if it's dropping, it will really drop up to somewhere here, because of the market structure. The market always repeats itself. The market always repeats itself. So how are we going to enter this market? We enter it on a lower time frame. So we go into the 15-minute timeline. That's where we enter the market. So let's remove all our drawings. Let's reset, and let's see how we get into this market. All right, so let's quickly do a markup. So this was it before it broke. Okay, so so this was it. This was the initial market structure, and so it broke. It retest, but it's not moved to this level. Okay, it has broken it. It must retest up to this level, and then it will drop the nuggets, and it will go down, maybe come to this level here, or further down to this level here. So that's the expectation, and there's also an upward channel. And so from your knowledge in charts and patterns, when you have an upward channel, definitely when it breaks, it goes down. Okay. Yeah, so that is it. So wait patiently for it to maybe get to 1.33, 1.333, and then it will really drop down, hard down. Just be flexible on the markets, and just wait for the market opportunity. So in this case, what's going to happen is that when it is retracing, when it is retracing, you know, it came down this way. Yeah, so it's when it's retracing now, it's ended here. It ended here, sorry. Okay, but this was the highest point of the candle. That's where so you have to hold on, and then you can milk it down from here, or you wait for it to it broke, so it must retest. When it retests, and then you you'll pick it up from here, especially on this timeline. But if you're already in this trade and you're on a sell, just hold on and be patient. You'll get there. All right. So this is it. You can put your comments. You can put your favorite pairs there, and you could do a markup of it. Don't rush. Allow the market to come to you. You could like and subscribe this page, and that makes us to work extra hard for you. So cheers and good luck on the market. See you next week on another pair. Bye bye.